Did you know that as the US dollar has risen, you have seen foreign countries buying less US debt? And if the US consumer stops spending, well, then you're going to see the Federal Reserve having to step in, or else. We'll talk about what that entails today. Consumers are still spending on fun. And this is important. It's an indication that the consumer still has money to spend on things that they don't necessarily need. Americans shell out for pricey hotel rooms, splurge at theme parks, and run the slots in Vegas. So the money is certainly there. And the way that I see this is that, in one respect, this is a good indication that they've got money. But and the second way to look at this is that people always push themselves to the edge. They never have enough savings. This is important. If you look at the personal savings rate right now, it has dropped to levels we haven't seen in years. And then you also have to factor in credit card debt is absolutely skyrocketing. So they might be going in the slots in Vegas, but they're not doing so because they are, having all this cash raining down from the skies. At least that's what we are seeing. Let's take the next look at this. Ultra rich are fueling sales of luxury brands despite inflation and recession fears. Now, they break it down. That's the title, ultra rich, but it's simply people that have a lot of money. And you can see that the brands like Ferrari and Louis Vuitton and so on are doing very well. In fact, they can't keep up. So you see that when you look at the total population, where the money is being spent, it starts to make a lot more sense here. You've got people with too much cash on hand, and those people are spending on the Ferraris and so on. And maybe they're buying Rolex watches and Richard Milles and all these things. But then you've got other people that are certainly spending money. They go to the mall and so on, but they're doing that on debt. And that is, of course, a concern. And so, what happens when you run into a country that is simply pushed to the edge? Well, this is an extreme example that's taking place today. And I say extreme example because I'm not trying to link the United States with Sri Lanka, but I just want to give you a little bit of insight as to what can happen. And they're discussing here that Sri Lanka's economic collapse raises alarm bells for other emerging markets. And so when you have a problem, it can be really exacerbated very quickly. And that could happen for things that come from outside. It could be internal matters. It could be weather events. It could be for anything. But the point is that it happens so rapidly. In fact, inflation has risen past 50% and it could hit 70%, making it harder for people to survive. The government defaulted on its debt. So they said, we can't pay you back. So what happens is they have to start selling off assets. They have to start cutting their government spending. They have to start doing things that are drastic, real austerity measures that affect people, not the perhaps good type of austerity that would, get rid of the bloat. No, that's really not what's happening. Sri Lanka is facing its worst economic collapse in its modern history. This is due to a long-standing structural weakness exacerbated by a series of idiosyncratic shocks. Sri Lanka's crisis can be a warning sign to other developing nations because it's a classic emerging market crisis in many ways. You can read about different crises that have happened before. I mean, there's been so many. I'm trying to just think of some books that come to mind. The Dollar Crisis by Richard Duncan. I mean, there are others, of course. But you can look at what happened with the Asia crisis, look at what occurred with Thailand at the time, the peso crisis with Mexico and that they devalued their currency significantly. There are many others. And so what we have today is a crisis of many, so many different sides to this coin. You've got the Federal Reserve, other central banks, all committing to the same thing. We printed way too much money, and now we're going in the exact opposite direction. But then you've got the shortages, the supply chain, all these different problems. And I couldn't believe what I was reading when I found this. Wait a minute, a potato shortage in Idaho? Yes, that's right. Apparently, Idaho, And please let me know, my friends, if you are in Idaho or the surrounding areas, if you're not seeing those potatoes you did before. I mean, this is crazy. Are we going to have a sand shortage in the desert? Like, what's going on? But you could see here that basically they had a bad crop, and as a result of it, you get less potatoes on the other side. I mean, you could read it for yourself, but I just think that this is happening in just about everywhere with just about everything. Even potatoes in Idaho could be in a shortage at one point. And so what happens with all of this? Well, in the case of the US Postal Service, they're going to, quote, temporarily hike prices for the holiday season. You got to do it, right? You got to make that happen. And what this means is that obviously it's not going to be temporary, um, but prices will rise on the consumer, whether it's, shipping a package or whether that's potatoes at the store. Small business sentiment and profit margins, and that red dotted line is the small business optimism. You could see what's happening here. They're worried, they're concerned. Okay, small businesses are really hurting today. This is going on all around. You know that. It's the same thing in Europe, it's the same thing in the United States and Canada and so on. And we see the same kind of things, okay, because you are watching the actual amount of profit just being squashed down. They know they can't raise their prices all the way through the roof because the customers will leave. And so you look at what they're trying to do, and they don't want to lay people off because are they going to be able to get them back? They can't increase their prices too much because the customers won't come in and their profits go down, 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 and then they go out of business. And this is terrible. It's terrible to see small business affected in this way when you have such, prices that are just going up all over the place. And this is just an example of bloated government. What takes years and costs $20,000? A San Francisco trash can. I mean, this is just ridiculous. And yes, they're going through the testing and they're trying to figure out what the best trash can is to deal with their city's garbage problem. But the point here is that you cannot resolve these issues that are fundamentally there by the same, doing the same things that got them there in the first place. Is too many thinkers around a boardroom table and not enough action. Get rid of the bloat, get rid of all the nonsense, and take action to help people. What needs to happen? There are so many different things, but I'll tell you right now, the things that they are putting in place today, not going to help. Okay. So I wanted to show you what's happening with the markets because you see the profitability declining, you see what's happening with the consumer, and that has an impact on the markets. And then you might say, well, I'm not invested in that. I'm not buying Peloton and all this stuff. But what occurs when the companies start to see their profits diminish? Do they simply sit there and take it? Or do they immediately begin cutting staff? Well, let's look. You can see the GDP, essentially the economy, a measurement of the economy, versus earnings growth. And we have gone to absurd levels right now. S&P 500 earnings, that's the black line. You see it going off the charts. Essentially, you don't need to, understand the whole chart. All I'm trying to show you here is that earnings have gone up considerably. And that needs to have some level of balance with the economy. And that's not the case. So earnings went too high, too fast. There are other things, earnings growth and so on that you could look at for yourself. But all I'm just trying to show you is that usually this reverts to the mean. And that unfortunately, isn't happening. If you use the GDP as the mean, it's just not occurring. Okay, so this is something that people should be aware of. Economy, markets, while disconnected because of quantitative easing and so on, there are still some levels of it that do play a role. And you look at what's happening in the markets and you see this as one example of what I would argue is not accurate. Because right now, you look at this indicator, the bull bear index, and it's just showing us that right now, still today, we are in extreme bear. Does that feel like it? I mean, when you're looking at certain stocks that are, in my opinion, complete garbage, and they are performing extremely well, where's this bear? Where is the fear? I don't see it. According to, there's different fear and greed type of indexes, but this is one of them, showing us that we're at a neutral approaching the greed. And, you know, I just don't agree with that. I think it is way, way back into the greed levels. Euro area economic confidence has tanked across the board. When you're looking at the manufacturing, that's this line right in here, and as well as the consumer confidence, which has just plummeted, you see what's going on with people. Why? Because they see it at the stores. Germany, this is the same kind of thing, okay? You're looking at retail sales and consumer climate, consumer confidence, same thing. These things are declining, and it's all because of inflation. Inflation is that one thing that we should be paying a very putting a very close eye on, because you're not going to know what's happening tomorrow. One of those aspects is what people pay for their electricity, their energy, their food. This is a worrying signal from oil traders of a European recession. The most recent signal that Europe may soon face a recession comes from oil traders who are selling European gas oil futures while buying US diesel futures. This is just one little thing here, but Europe is in the worst position possible. And as a result of all of this, I do believe it's going to hit people hard. I do believe that this is going to have a negative impact on them. And of course, businesses are affected, small businesses, even medium-sized businesses perhaps. And what do we do as individuals? Well, we need to take action. What does our portfolio look like? What do we have right now? Are there things that we can sell? Are there things that we can rent? We need to look at this, and we try to increase our income as best as we can. Even if that's $100 a month, you can increase your income. Great. You take that and you try to put that somewhere safe in real, tangible assets. What about your current position, where you're at today? Is there a way that you can increase the value for your employer and actually get more in compensation? Hey, if I sell more of these, if I push more of these, if I take an extra route, if I do this thing for you each and every day or each and every week, will you be able to pay me more? Will you be able to compensate me more? It's a performance-based system, and maybe, just maybe, you're able to work that out. Some places you can't do that, but that caps you in what you can earn. So, largely these are not good long-term positions, but it all depends on what you like. I'm just trying to give ideas. I hope you appreciate that. And don't forget to subscribe to the channel. And of course, I'll see you on the next one. Take care.